This is Shorthammer. It is the 11th of September, 2022, and this is Trading Zones. September 11th is definitely a tough time for the country as we remember 9/11. So sending condolences out to all of those that were impacted by what happened on that tragic day. Looking at the RTY, I think last week we got pretty good counter trend movement. And the question is that counter trend movement forming a new trend, right? Is this the rally that everyone has been waiting on all year that takes us back through the highs of the year, right? Do we break the highs of the year and do we begin to squeeze? So the answer to that is nobody knows. And I've heard a lot of different theories of people saying that, oh, because the Federal Reserve is releasing 1 million barrels a day, that's causing the cost of oil or gas to go down. And that's why the market's rallying and this. And no one is quite sure right now because I think there's so much heavy hedging that just from institutions, everyone's just trying to cover their six. What do we know? Federal Reserve still raising interest rates, right? That's factual. What do we know? Because of the lowering gas prices, that what consumers are paying to be able to fill up their vehicles has gone down, right? So the cost to, if you use oil for utilities or whatever, or gas, that should be a little bit less expensive. So I think we have to just look at it from the perspective of, okay, yes, the cost of oil has gone down, a little bit, and that should pass on to the consumer. But looking at what's going on in Europe with the sharp interest rate hikes, what we're dealing with here with interest rate hikes, keeping an eye on the dollar and sort of the currency wars as we're trying to export inflation and other countries are trying to combat that in their own way. It's sort of a push and pull, right? A tug of war back and forth where it's like it's like kicking a can of poop back and forth, and each side is kicking it back and forth, and it's like, hey, it's on your side now, and the other side is relieved, but it's still a can of poop. This is still like all the things that are happening right now. It's still a lot of bad news. So what we want to look at here, looking at the RTY, is levels, right? We don't care if it's bear market, bull market, levels are what's important. When the RTY dropped down here into this this area here, 1745 by 1797, it hit the pop blue. This is the pivot here. We touched it here on the at 6 o'clock on the 6 o'clock session on the 6th of September. And at 10 o'clock, look at that, didn't go lower. Then we bullish engulfing here. And what we're seeing is a battle against that downward movement. Even though we saw this flare down, it's sort of, we're buying out of this spiral. So what we should be watching now is we're up against the 1880s. We see a little bit of candle structure here, but this looks like where we are right now. Buyers give us a little bit more. It'll give us 1898 at least push. We'll have to see how that plays out. And then we have to watch to see if we can get above that, get through the 1910s, which is definitely an area. You can see between 1898 and 1910, you can definitely see a little bit of turbulence there. And if we get up in that area, we should see rise up into the 1940s. So the 1898 to 1910-ish area is going to be slightly turbulent if we catch a bid from the 1880s up. And then we have to see where we go from there. Remember last week and the week before, we mentioned that when it comes to banks, right? When interest rates go up, people usually do less business. And So there's less new business coming in because people would prefer to I'd say take on debt at lower interest rate levels, right? That's when the market is more stimulated and more motivated. But at the same time, there's a point where the debt that you currently have on your books and the debt that you're currently servicing, that because of the rise in interest rates, you're making more, right? You're making more from people who they have no choice but to come in and borrow money, from people who have maybe adjustable rates on, whether that's through, shady car loans or whatever it may be. There are people that need to service their debt. There are people that will need new debt, even if it's not as many people. What you're making for that debt is so much more, right? Because the interest rates are so much higher. Interest rates are basically double where they were last year, right? So the question is even if if you're getting half the business, you're technically almost making, based on the interest rates, you're technically almost making similar money, right? This is just my layman's interpretation. And so we just have to see where things go from here, how everything balances out. The economy is still under tremendous pressure, even though employment is looking good. I think the question you have to ask yourself as you peel back those layers is that more people are working, but what are those jobs that they're working? Are they able to pay their bills? Are they able to pay their rent? Are they able to pay their mortgage? And I think those are the questions. How many people have had to refinance because of inflation and the money that was made from like pre-pandemic to till now, right? As far as the growth in the value of your house, have you had to refinance under unfavorable terms because you need that cash to be able to pay your bills? So there are a lot of questions, I think, that are floating that we don't know the answers to. So anyone being overly bearish or anyone being overly bullish is just not logical. There's a lot of stuff that we don't know. So in this rally, the best thing you can do is watch your levels and scale out if you're in multiple shares or multiple contracts. And if you're not, at the first level of resistance or supply, just get out. You don't, or have a trailer in. You don't have a reason to try to get the whole move. Just trade point to point and take what you can off the table. That's just my opinion. But this is a nice little push. We'll see where it goes. Very sharp. And the thing that we have to remember about sharp moves, the sharper the move, you have to really be concerned about a sharp retrace, because this is a very sharp move, right? So we have to see what the retracement would look like with a move that sharp. And we'll see. On over to the MES. And so checking out the MES and had this little candle we were in, nice little sideways here, and a push out of this, broke above this downtrend line, pushed right into this area that was a previous channel, and that will be 4070s by 4150s. And what we have to see is, can we first get through the 4112s? That's the first level to get through. Last time we we touched that area, right? Not this time here, not on the 26th of August, back around the 23rd. It did create a little bit of a bounce from that area. Prior to that, look at August 9th. Prior to that, August 5th. You see, these are days that we interacted with that area on a pullback, and the buyers were there. On the 26th, this was probably a news candle. And you saw the strength of this drop, right? It cut through that area like butter, and the next candle dropped right through this zone. Didn't really spend any time there. We had a slight back test here on the 30th of August, where we tested the bottom of the zone, and then we sold from there. So now we're back there now. We gapped through the bottom of that zone, right? That push up through here. And so now that we're above that area, what we want to see is, will there be continuation, right? And the continuation is up into the 4110-ish area if we get it. If we drop back below this zone and we don't see bullish continuation, then we have to watch to see if we see a retrace to this slight trend, this little sharp uptrend that we have here, right? We have to see if we see a retrace to that area. And if so, do the buyers still step in and push us back up? So that's what I'm watching going into next week, is to see how this shakes out. I know we do have economic data next week, and people are definitely watching to see. September is usually a very turbulent month, and I think people are definitely watching to see, are the buyers more confident, right? Because even though September is usually a more turbulent month, this has been a turbulent year overall. So we have to see what the appetite may be for buyers and sellers as we go into this upcoming week, to see where is the confidence, right? Is the confidence that the Fed is going to sort of ease on those interest rate hikes and maybe hike a little bit less than expected? And the other question is, remember, after Jackson Hole, we did receive good news. There were a couple of Fed statements saying things like, hey, we're going to keep an eye on the data, and based on the data, that's how we're going to make our decisions. The rate of the hikes is not etched in stone. Excuse me. And I thought that was positive data. And since then, we received positive economic data. So I think that the way you have to look at it is what specific data points is the Fed taking into account to make their decision on the frequency and the veracity of rate hikes. So I would be looking to say, hey, do I think they're going to stop raising rates if, for example, inflation is 0.05% less this month than expected? Yes, I think they're going to continue to raise, because whether it's 8 or it's 7%, that's insanely high inflation. Insanely high inflation, right? So regardless of what we think about, it's one of those things like saying, do you have fourth degree burns or third degree burns? Both are putting you in the hospital, and someone's saying, oh, well, we thought it was fourth degree burns, but instead it's third degree burns. Oh, you don't have to go to the hospital. It doesn't work like that. You still got to go to the hospital. It's just how bad the burn is, right? So right now, we could say, oh, with this economic reading, the degree of the burn was only third degree. Yes, but that doesn't mean you're not going to the hospital. Yes, it may not be, the inflation may not be as high. So the Fed still has to continue to raise rates. And the thesis that that inflation has peaked, that might be true, as long as as long as the oil prices or gas prices remain lower, right? But what happens at the end of October, heading into the elections? So post elections, what's going to happen when the federal we're no longer releasing 1 million barrels a day to help mitigate the cost of gas, right? Like or the price of oil. What happens at that point? So I think there are a few other variables that are floating that are outside my area, because I don't really usually get into the fundamental stuff at all. And so, for those who are into the fundamental things that read into that, and I read into it lightly, right? But those that are deep into fundamentals and trade purely on fundamentals, and the technicals are secondary. Like the other way, technicals are primary and fundamentals are secondary. And so they may have a different view of this. And so those are the things that you do want to dig into, because this is a dangerous time, I think, to be all in the market. The smartest thing you can do is sort of scale down your size and hedge yourself if you're going to be in a little heavier, but scale down your size and just ride the waves point to point. That's my opinion. But let's see what happens at this level. If we continue to see buying here, the 4110 is definitely a good level to watch for. 4113-ish, roughly in that area, to 41 teens. If we get through that area, then we could give rise up into the 4150s. And that's where, if we break above that, I would definitely start looking at this this rally a little bit differently, right? Then I might say this rally may have a little bit of legs on a technical level. Right now, this is a nice pop, but to me, it doesn't really mean anything. All it means is follow the wave point to point, right? And now if we sell back below the 4070s, then I'll be watching for a pullback into this trend, and we'll see how that plays out. M&Q, same thing. Trying to break above. We got to see how that plays out. We had this uptrend line for quite some time. The top of this, or where we would hit if we right around the 12,750s, 12,800s, depending on what day, if we kept on going. If we pull back within this downtrend, then we'd have to watch first off the 12,500s. Then we'd fall back below that into the 12,300s. Remember, 12,500s to 12,600s, roughly in this area. This is the area where we have to get above to really flip the market, in my opinion, right? So this is a tough area. Once we start to get around this 12,600 area, right? So, 12,500 and below, I believe we're going to sell. You get to those 12,550s, 12,600s, we really need to get to 12,600s. Once above that area, we could really get a little bit of buying, see the 12,800s, and see where we go from there. So for me watching this, let's see if we can hold this continued run up. And I did not, let me do that now, but I didn't put like a janky uptrend on this because this is so sharp, but we could, right? We could slide something here and see. Let's go like this. And I'll tighten this up later. But we'll see how long we ride this. I'll tighten it up later. Not a big deal for me right now. But up against the pop purple, want to see if we get above this and we see continued buying. 12,659. That will be interesting. Do we have room? Are we going to climb to the 12,800s? I'm not sure. I think the economic data this week should definitely have an impact on the market. And if I'm a buyer, I kind of want to keep this market up as long as possible to try to see if that can spark further gains. But I have no confidence because usually higher interest rates do lead to a downturn in tech, because the cost for a lot of growth companies that usually tend not to be as profitable, they have to service debt, and they usually like to borrow to be able to invest in growth. And so that's and also their money go, even for those that have cash on hand, your cash is worth less based on how much more you're paying, especially when inflation is like this. Things cost you more, so your cash is worth less. But let's see what happens. But I do like this little setup. Let's see if we continue to buy above this downtrend line, and if we can sort of get back above this uptrend line here, this multi-day uptrend line, and see what happens. For me, I'm just going to watch the setup here, and I'm probably going to honestly start looking for to hang some iron condors, and then hang my iron condors and then trade against that intraday, just expecting that if we do see a massive move in either direction, I'll begin to exit some of those and scale out of some of those. But if we happen to middle, my intraday scalping will be more than enough to cover whatever happens as far as if we see any premium burn. I'm not really worried about it in any capacity. Like, just consistently works, really does, especially in this type of market where you see so much extension and you can see sharp movements, that if you can win on the intraday and also win on your weekly and multi-weekly plays, like your swing plays, and you win by playing, playing for extreme moves, right? Some of my buddies, they rather do different type of techniques, butterflies and things like that, but everyone has a different strategy to be able to take advantage of these moves. So looking at Amazon, pulling back up against the 133-ish area, we see a little bit of candle structure here. We could buy above this, right up against the pop blue. Could we get an extension up to the 136.50s? That would be great. We have to see how this plays out, though. For me, I think this area right in here, this 133-ish area, is an interesting area. If we can't get above that, then we definitely should see a retrace. And that's the potential, but right around here to 127.68, if not to the 124s. But if we could pop above this, then we could definitely see a little bit of upward movement. Let's see, like 130, this 139-ish area, and then up into this structure here around the 140. We see if we can squeeze through there on Amazon. The beauty is you do want Amazon to sell even more. I'm not gonna lie, you want Amazon to be back down here, and you want to grab that bad fella for the holidays, for the run, right? That's what you actually want. You actually want Amazon to if I'm an Amazon trader, I want Amazon to miss on their October earnings and be down here somewhere, so I can get long and swing through the holidays. Definitely expecting them to have massive numbers, right? But that's what I'm watching on Amazon, these levels. We have to see how this holds, like a little uptrend here, break of this downtrend. If you want to draw this line to make it more visual for you to look at, to be able to see, you could draw a line in here and say, hey, we we kind of broke this downtrend. This, if you wanted to. Everyone, trades a little bit differently. And you could draw your line in different areas. Like when you draw your line is what's important, right? If you drew the line here, when only these candles were formed, then your downtrend would be here. Drawing the line right now, downtrend is here, and we want to see, do we continue to go up, right? Do we continue to see buying here? Do we run into a little bit of turbulence at these wicks here? Do we reverse here and go back down? So that's possible. We have to wait to see what happens. I have no confidence in this rally. I'll just follow it based on what's going on intraday. What are the buyers and sellers doing? That's it completely. I don't have any buying. I don't have any strong confidence in. I'll follow it. And any selling, I also don't have any confidence in. I'll follow it, because just as we if there's one thing you can be sure of, the volatility of this market is that you can be sure of nothing. Week to week, you just listen to people who are prognosticating on what they believe is going to happen, and people have been pretty much wrong every week. The only thing that's been right has been trading level to level. That's your safe zone, level to level. That's your safe zone. So if we're taking a peek here at Netflix, looking at the 220 area, we held. Now we're up against, see, the first area I'll be looking at is right here around 229. We're through that. Now we're up against the 233.59-ish area. See if we can get through that. And we're a little bit above the pop blue. If we can see some extension up into the pop purple here, we push up into the 244s. We have to see how that plays out. Still not as rangy as you'd want Netflix to be. Sort of, it seems like it's kind of meandering back and forth between the 219 and the 230-ish area. That's interesting. I wonder if that's going to continue. There were mentions of there being progress in their advertising business, that they're looking to charge a premium to advertisers that wish to do business with them. Definitely great posturing for negotiation, telling the person that's negotiating with you or putting it out there publicly that you are going to charge a premium. So make sure your bids are high. But we'll see where Netflix goes from here. I still think it's a company that needs to borrow money, and if their advertising play works out, they're going to do really well with that, right? And but we have to see. Netflix is a company that's struggled to be profitable. So just have to wait and see what's going on. Remember, there's just a high correlation in the market. Things are just moving together, right? And so it seems as if what's going on overall in the market is overriding what may be the sort of the individual thesis for a specific ticker, right? These specific blue chip tickers, a lot of them are sort of at the mercy of the overall market movement, which is usually how it goes. So just have to see on Netflix if we get a retrace and pull back in here, but this just seems kind of a little bit too tight for my taste. What I like to be in. NVIDIA, good extension here. And so NVIDIA below the 158 by 180, one-ish area. Below that zone, we look for an extension down. We did see that. And from here, what we want to see, we saw a slight bottoming here. So that's interesting, right? So what would you do? Me being me, what I would do is I would like an alert, right? If this goes back through there. And I want to know if it does. That's what I want to know. If this goes back through this level, I want to be aware of it. We do have a line here at 138.43. Our next lineup is 157.86. Above that is 181.91. If we go back through here, we go below this little alert that I have, the previous lows where we saw buyers step in. Then I'll be targeting the 119-ish area. We'll see if we get there. We do have a few pivots in between. But the story of NVIDIA, you had to read into what's going on with chips. And I think that they did take the hit from being banned from doing business with China, right? And so we have to see, read more into that and the resolution of that. Check the video from last week. I think I mentioned a lot more about what I would be looking for if I'm trading NVIDIA and the news comes out that, they have an issue, our government is telling them that they cannot do business with China, and figuring out what portion of their or percentage of their business is done with China. And then another thing I'll look at is, okay, if China cannot get their chip from NVIDIA, where could they get their chips from? Where are they shifting that business? So that money that could be leaving NVIDIA, right? Where would China then rotate? Do they have a number two that they could go to and get those same chips? And the other question I'd ask is, the chips that NVIDIA creates, right, and export, are those chips for cars? Is it a specific type of chip, like chips for like military purposes, or is it chips for commercial purposes also? And so is there another supplier that could fulfill on those chips for China? Could they get it from someplace else? Will there be a constriction on the China economy as far as car production, right? Like what we saw here when we had an issue with chips and the price of used cars went through the roof. That's something to consider for those that play Asian stocks or stocks that or companies that do business specifically in China, because that could create a problem that they have to solve, right? So that's interesting around NVIDIA. But I mentioned these levels on NVIDIA. We'll watch and see what happens. If we get a pullback into the 152-ish area, we'll be through these lower levels, and that will be interesting to see if we can regain that and get back into the 150s. But for me, I'll just be watching this and keeping an eye on SMH to see if I see any good setups to trade NVIDIA. But I'm pretty much sticking to indices right now. I'm not gonna lie, this is way easier. Mhm. Looking at Apple, you definitely see the bottoms here. Look back on the 26th of April, we saw these lower areas through the 2nd of May. Right in the same area, we see turbulence. We're there now, pulling back up. Have to get back to the 158 pop gold. Above that, we could potentially see some extension up into the 165-ish area. We have to wait to see, though, because we want to get through here to get into the 160s. If we happen to reject and go back down, we cut through the 153-ish area. It looks like we do have a slight hitch down in here, the lower 150s. And then below that, we have 147, then 144, then 142. I'll make sure to pop some new lines in here. I think the lines that I have for this level up here are probably over on TOS. I think they're on my TOS charts. But I'll pop in some new levels here on the Apple so that we have clear lines to look at. But right now, below the pop gold, I am, waiting to see if we get above this and if we see a little bit more buying, and then maybe we get an extension up into the pop blue. But I think, what was it with Apple? I think they had an issue with China and lockdowns, and I think they just came out with the iPhone. Is it the 14? And one of their substantial, or one of their most important markets, China, I think they just had a lockdown there, which is definitely going to impact sales a little bit, right, and roll out a little bit. So I think that's interesting. I don't know, Microsoft. Nice little bounce here on Microsoft, and as we pull up, I think some people may be looking at the 265-ish area. For me, I'll be watching more around the 267-ish area, just because you see these rounded tops, places where we reverse price, or at least there was some sort of turbulence here. So we're around the 267.85, we continue to go. If we halt in this area, look at these wicks here, we have to see if we're going to continue upwards here if we pull back. But to the downside is 263, below that is 261, then 259. Upside we have 265.88. Yep, I would just be careful, because as sharply as we bounced up, we could see a retrace back down. Just be careful and cautious this week. I would be super light in what I'm looking for, because this type of, like, just looking at the structures, we have to see. Got to always be careful. We did complete the head and shoulders movement, and a retrace is definitely in order, but just be very careful, be very cautious. If you're getting in, get in light, then average as we go. Definitely be careful. Take a peek over at Tesla, then a peek at Meta. Tesla, nice bounce. We see these 270s. Nice dip into that area. Nice reversal. We're buying back up. We're through the 275. We're through the 286. Looks like we're strong to the 301s. If we can get through the 300s, 301-ish area, looks like we do see some tops here, right around 313. So we'll see what next week looks like, and what the news out of Tesla would look like. But I'll be watching these levels. I want to see if we get over 301 first, and basically the pop blue 302 is 302.91. I definitely want to see what happens up here, because look at these previous levels. Even though it's pre-split, the air has been thin. So definitely want to see that we're back in here. That is significant. That we back tested there and we bought right through those. That's significant. So let's see if we continue up through here, the 301s to the 313-ish area. That will be interesting to see. on Tesla. This is a very sharp buy up. So yeah, I want to see if we retrace early next week. This is very sharp buy up, very sharp, very sharp. Peek over at CRM. I actually got kicked in the minimals on this last week, trying to fade this, right? And what I got caught on was I was looking at this candle structure here from the 12th of May. All this area, 23rd of May, all through May, these lowers. When we dip below, I tried to play this back test area here, this little pocket, like a 155-ish pull back into with a stop of 158. And I got absolutely roasted. It was beautiful. I played it with a vertical, so it's not a big deal. Got out with not even first degree burns. But I was wrong. And the rally sort of took this out of what I was expecting. I was expecting there to be sort of more meandering. And I'm like, hey, there's probably not going to be any news. We're going to pull back into this area. And then we're going to continue like this little area here. And then we're going to continue back down and hit the, this 149-ish area. That was my expectation. That is not what happened at all. And instead, this looks like a janky W pattern here, and it just, punched me in the forehead, right? But that's what happened on CRM. So if I'm watching CRM, if we see continuation here above the 161.30s, 167.07 is coming right after 164.44. Those are some levels to watch on CRM. As long as we hold these bottoms here, I want to see if we continue to see a rise in CRM. It was definitely pretty weak after earnings. If you're doing anything more than sort of scalping this, and it's going to be kind of funky sometimes, I would make sure to go back and check that earnings report to get an idea of what their guidance looks like, right? And if this selling is warranted, or if this is just the investors in CRM trying to find better positioning. Because you'll see that on Microsoft sometimes. Microsoft will have great earnings and then sell off. And then you'll see that the investors in Microsoft will begin to sort of buy back in at those lower levels, and it'll rally based on what the earnings report has said about maybe their guidance or about what a specific division might be accomplishing and the growth in a specific division. So that's something that's interesting. But the other thing you want to keep an eye on, that I would definitely be keeping an eye on, is that, remember, a lot of these companies, they're laying off workers because they're predicting that there will be an economic downturn, right? So you don't want to be the genius that's going to predict against the prediction. If a company is laying off workers, even if it's for nefarious reasons, they're doing it for a reason. It's a reason why they think that there is going to be a downturn. It's a reason. If you have too much business to handle, you're not laying off workers, right? And unless you found a way to replace those workers easily, but usually you do want the most experienced workers that can handle that new business and make those clients feel comfortable. Usually, you do want those people to still be on staff to be able to manage those high level relationships when there's a problem and something comes to them, that they can handle it quickly. When you sort of begin to rotate out the old guard, you're usually preparing for at least a slight pivot, slight. And yeah, we'll see. So CMG, beautiful movement here. So if we're looking at all of the candle structure here on CMG, there is a potential for some downside here. I was in this last week, worked out well. But at this level, I just want to see what happens if we continue to go up. And if we do go up, the levels that we have here are, this looks like it wants to go back and down. Just looking at that, that does not look like we are happy, right? But 728, 754, 1778, 1799. If we retrace, potentially the pop gold here around 1650 will be the first hitch, but then I'll be watching out for the 1622 or 1620s. Below that, the 1605, then the 1592, then potentially back to 1548. Not going to happen straight line probably, but we'll see how this plays out with CMG. If we're going to continue to buy and bid back up here, it's been on a massive run since earnings, and we have to see if this is going to continue, or if at what point will the investors in CMG begin to take profits. So we'll see how that plays out on CMG. I am going to keep an eye on it, and I do like to take trades on CMG at specific levels. The liquidity is absolute garbage, and you have to really be patient. And you cannot premium watch. CMG is one of those tickers, like the SPX. You can't premium watch unless you're selling premium, right? But you can't premium watch because there'll be wild swings in the premium that could freak you out if you're used to trading something that's super liquid like a Microsoft. And you know, you just got to be comfortable with your setup and comfortable with what your target is. That's how CMG rolls. You got to really be careful. Let's jump on over to the SPY. So if we're looking at the SPY, we're right below the 407s. We get above this area, it does give rise into the 412s. That will be beautiful. Maybe even up into the 413s. If we don't get above this area, watch for a pullback to the 40380s, then maybe even back to the 399s on a SPY. That's the area I'll be watching. We'll see how that plays out. But yeah, that's what I'll be watching on SPY. If you enjoyed this video, please don't hesitate to go to our YouTube channel, Power of Pivots, to subscribe, where you can look forward to receiving more videos, not just from me, but from Elisa, as she shows you how she uses her Power of Pivot strategy to find great pre-market, intraday, and post-market setups. Thank you so much for your time. I have a few more thoughts, but I will, keep those to myself. I would just say, just be careful, because a lot of what's going on right now is pure politics. I know it's always politics, but it's pure politics. We're headed into a midterm elections, and the government is going to do whatever they have to do to get your votes, and that's both parties. So just be careful as we head into the midterms, that they would do their best to keep things up, and that's their job. That's what they should be doing, right? Just a slight peek. I know I'm headed, that's an outro. Slight peek over onto CI. It's been in this little zone, right? This 283 by 292-ish area. But if we happen a bit above and we see some extension, that might be interesting. Maybe we push into the 300s. So we'll see on CI. I'm going to set some alerts on this. But this is interesting to me, that we're sort of leaving this consolidation and potentially going above. We'll have to see if we see any continuation next week, or if we're back inside this box and potentially retracing through here. But thank you so much. And remember, you're always one trade away. And if you're asking what that means, one trade away from figuring out your system, from figuring out your process, from breaking out of that funk that you might be in, you're one trade away. So no matter what's going on, this year, or what's going on this past week, or what's going on this month, as far as your trading, every single trade gives you an opportunity to sort of recenter yourself, rebalance yourself, and be able to build from that. So as I like to sign off with, you're just one trade away. Thank you.